All right, well, stocks starting this week in the red, but what, if anything, could change their direction? Our next guest says there's a bevy of economic news, including consumer confidence, durable goods orders, real GDP, initial jobless claims, and, of course, the Chicago PMI. All that stuff could have the markets in the green by the end of the week with a little wishful thinking. Martiak, Senior Wealth Strategist for Premier Financial Advisors, First Allied Securities, joins us now. You know, Friday's the last day of trading, last day of the quarter. We're going to see window dressing really regardless of what these numbers say, aren't we?
I agree, Tracy. I think this is a great opportunity for the hedge funds that haven't participated in the rally. Year to date, they've been up, but not quite as high as the major indices. So I think you'll see hedge fund managers going in and buying when they can. Obviously, the market today and last week as a whole paused, and there was some profit taking. But I believe that the market will pick up between now and Friday.
If we do see a pickup between now and Friday, do you expect managers to potentially sell out and say, you know what, I'm going to close up shop for the rest of the year because who knows what's going to happen fourth quarter?
There has been discussion. You'll see that among portfolio managers. They've had a great year. They had a great year in the first quarter through March. There were many, and then we took a dip in the second quarter. But you could conceivably see that because there will be some volatility as we get into or lead up into the presidential election.
All right, so let's talk about some of this data. You know, jobless claims were up last week. GDP, we know, has been weak. Consumer confidence can go either way, depending basically on how the wind is blowing. What are you expecting?
I expect consumer confidence to be higher month over month, and I see that trend continuing. If you look at automotive sales, if you look at consumer discretionary, everything is trending higher. I really fully expect that this will help the market with consumer sentiment. I see that improving, especially in the housing sector. I see a nice uptick and a trend in the housing sector with new home sales and existing home sales.
Okay, so it seems that domestically we are maybe starting to feel a little bit better, but why is it that Europe seems to be off the table for many investors?
Well, structurally, simply because it looks as if Germany is providing a backstop, and overall we don't have to worry about Greece right now. Ultimately, we may have to. Spain may reject the austerity measures, but it seems like we've had some transparency. The markets like transparency, so therefore Europe is off the table right now. The attention will turn more closely now to corporate earnings, third quarter earnings, which many analysts expect will be lower and are providing forward guidance to that effect.
And Ash is going to talk more about Europe in a bit, but let's go to earnings right now. Are we setting the bar lower on purpose so yet again we could jump over it?
Not necessarily. This started last year, so this is continuing. Analysts are expecting Q3 year-over-year earnings to be lower. So I think still the market's very affordable. PE ratio, trailing PE ratio of 16 for the S&P 500 makes it still very, very much affordable. It's the wild card, and that's the presidential election. And we're going to see what's going to happen after the presidential election as we go toward the end of the year.
We might see
with
a lot
the fiscal
of
cliff and
closing house on Friday, right?
Anything is possible to protect the gains and to provide their investors. I know myself with my clients, I'd like to provide them with good, solid results as opposed to giving back profits to the market.
Take it. Martiak, Senior Wealth Strategist, Premier Financial Advisors, First Allied. Thank you, sir.
Thank you.